a look on how to get a good entry for your scalp trade. How to get a good entry for your scalp trade. So shortly we'll be going to the chart to see it practically on the chart. But before we move over to the chart, let's have some theoretical review of what scalp trading entails. Scalp trading basically means making your trade decisions or taking your trade based on what you see on the lower time frames. You can take your trade on 1 minute time frame, 5 minutes time frame, or 15 minutes time frame. So you trade with the aim of getting in and getting out quick. So for some reason, some of us who choose not to be day traders or swing traders who prefer to go in quick and get out quick. But these are the things you have to look out for to get a good entry, else you'll be trapped into the market and you spend longer time that you planned to, or even end up spending some of the profits you would have made on funding fees and all that. So before you start scalping, the first thing to do is to go to the higher time frame. Because you're scalping, you can simply go to 1 hour time frame and determine or find out the overall sentiment or the overall direction of that particular token you want to trade or coin you want to trade for that hour or for the day. Maybe you can check the daily time frame. So check the direction of the market for the day for that specific token that you want to trade, because it is advisable and safer that you trade according to the direction of the market instead of trading against it. So if you spotted that the market is bullish, it is safer to look for a long position. If it is bearish, it is safer to look for a short position. Now, after spotting the general direction of the market, let's say it's bullish. So what will you be looking out for? You'll be looking out for higher highs and then break of structure. Now, when there is a break of structure, you look out for a reversal, for the market to retest that particular spot where the structure was broken. Once the market retests that, because some people can jump in, but you might be trapped as the market is having some correction. So it is safer, because you don't want to be in the market for a long time, it is safer to allow the market to do its thing, break the structure, come back to that point where the structure was broken, and then that is where you start looking out for signs that show that the market is going to continue at the direction that is going. You look out for the particular place where the structure was broken and then to take your trade from there. So now we'll be going to the chart to look out for those break of structure, a retest, and then the particular spots where you ought to take your trade from, and you'll have a higher chance of winning that trade. Let's take a look at the chart for a bullish movement.
So let's take a look at this chart, hype USDT chart. So let's assume you open your chart and the market is already making this higher high. Let's assume this higher high has been made and another higher high has been made. So when you see candlestick or market pumping this way, it is not advisable that you enter at this bullish candlestick. You already determined that the market is bullish. So what are you looking out for now? Your entry. It's not advisable you enter at all these bullish candles. So what will you do? You wait for the market to make a retracement, because the market has never gone in a straight line. It keeps going up and down. You already established that it's a bullish market, so you saw this bullish candle. Don't jump in, wait for it to retrace. So how do you know when to retrace? You have your higher high here. You have your higher high. Let's mark this out. There is a higher high here. So these are higher highs on our time 5 minutes time frame because we are scalping, so we are using a lower time frame. So what do we call break of structure? Break of structure is that point, this particular point where the market retraced and moved past the initial higher high. This higher high has been taken out to create a new higher high. So this particular point where the previous higher high was broken to make a new higher high is called break of structure, BOS. So what do you do now? You've marked your BOS, then let the market move. Let it move. Of course, it doesn't continue in a straight line movement, so it's going to retrace. What will you be looking out for? Look out for where that market will retrace back to that break of structure. That will be a good place to take your entry. That will be a good trade, a place to take your entry instead of jumping at the middle. So this structure has been broken here. You let it move, and then when it starts retracing, wait for it to retrace to that your break of structure that has already been identified. So this particular spot now in this trade, this 39.577 will be a good place to enter your trade. You can set a limit entry, or better still, to be on the safer side, you just let the market run and watch out for the signs you'll be seeing here, whether this market is going to reverse and go downwards, or is going to make some signs here that shows that it's going to continue its uptrend movement. When you see that sign at this break of structure, you enter. In my next video, I'll be showing you how to identify or to find out that at this point this market is going to reverse and go downwards. There will be signs, so watch out for my next video. I'm going to treat it here, but for this one, you've seen that the movement continued just like that, just like that. The structure was broken here again, it continued, it retraced close to the BOS. It's not a must that it will get to that particular line, but once it's getting close to this place, you start looking out for a continuation pattern. Sometimes it will go past this break of structure a little bit and still continue. So that's how to get your entry. Here, let's check 1 minute time frame and see if there was actually a sign here that shows that there was going to be a continuation of the bullish trend here. So this is the break of structure we identified on the 5 minutes time frame. Now if you change your time frame to 1 minute, you actually find out that the market formed a double bottom. So this would have been a confirmation to you that this market was going to continue its uptrend movement, and then you have that conviction to enter your trade here and then take it off. For a scalper, between here and here is already enough for him to get out of the market. Most scalpers with large capital, they often enter the market with huge capital, and then a little move towards their direction, they are out of the market with a huge capital. So this is how to spot a good entry for your scalping trade. In my next video, I'll be talking about how to know whether the market is going to reverse while you're waiting for a retracement at your BOS. Sometimes it's going to reverse instead of retracing at your BOS and then continuing its uptrend movement. So this is it for this video. If you have any question, you can drop it at the comment section and then I will address it with another video. Thank you for watching.